Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patrons, Jim K, Thaddeus F, Craig K, and Daryl. Thank you for choosing to support the channel. It is so good to be back, and just a quick reminder, if you're ever wondering why there wasn't an upload, always be sure to check my community tab. That's where I'll post any updates. And to everyone that reached out with concern and or well wishes, just wanted to say thank you. From the start, Tesla and Starlink have been allowed to operate in Malaysia as 100% foreign-owned companies after taking into account the benefits they could bring to the nation. This is the exact same allowance or exemption that Tesla received in China, becoming a wholly owned foreign subsidiary, one of the only foreign companies to be granted that exemption. Malaysia does not have a central regulatory authority, so policies on foreign investment participation in Malaysia are actually sector specific, meaning they're regulated by the authorities supervising each sector. Generally speaking, across sectors, there are usually restrictions on equity ownership of foreign investors by way of mandating minimum or majority equity ownership to be held by local Malaysians, and or a requirement for a local Malaysian to be appointed to the board of directors. But both of these stipulations have been waived for Tesla and Starlink. Sawyer shared a chart from KBB, so this is US data only, but it showed Tesla sold 10 times as many EVs as any other car maker during the first 3 quarters of this year. Presumably referring to the competition, Elon said, "Room for improvement, I suppose." The new headlines about EV demand slowing should more accurately say demand for legacy OEM EVs is slowing. It's driven by a lack of compelling EVs offered by companies not named Tesla, BYD, Rivian, and maybe even Hyundai and Kia. As legacy OEMs pull back EV production, this will just make things even easier for Tesla, and over the next 24 months, they will most likely now continue to gain EV market share, not lose it. So while the media will oversimplify and paint this as EV demand down, this is bad for Tesla, the real outcome will most likely be Tesla sales up, legacy OEM EV sales down. Tesla has increased the cost of the black paint on just the Model Y from $1,500 to $2,000. Pair that with the Model X price increase, the Model Y price increase, Tesla looking to dial in some gross margin numbers for Q4. Just a few years ago, I believe it was around 2018-2019, black was a free paint color option. For now, black remains a $1,500 option for the Model 3. This morning, Drew Baglino responded to Jordan at the Limiting Factor on X, saying another challenge is solid-state electrolytes and separators typically contain much more lithium than those in non-solid-state batteries in order to achieve lithium conductivity, i.e. reasonable charge and discharge rates. This drives higher fundamental materials cost per kilowatt, yes, he means kilowatt, not kilowatt hours, irrespective of the cost of production. Polymer separators don't contain any lithium at all. Kilowatt, not kilowatt hour, is referring to power. So 1 kilowatt delivered for 1 hour would give you 1 kilowatt hour. Another way of saying this, solid-state batteries in the electrolyte actually require more lithium to get similar charge and discharge rates, which drives up the materials cost if you completely remove the cost of actual production. Even simpler, Tesla is still not at a point where it's concerned about being leapfrogged by a solid-state breakthrough. I think we can all agree between clickbait for views and the mainstream media turning into a propaganda machine, it's more critical than ever that we filter through the noise. To help me do this, I've been using Ground News, the sponsor of this video, a company that I'm being told many of you have tried out and have really been enjoying. Ground News combines thousands of local and international news sources in one place so we can compare coverage, check the factuality of the sources, and be alerted to media bias. Take this one for example. Elon recently had some choice words for Scotland's First Minister, but with Ground News you can actually see a quick synopsis of all of the aggregated sources for left-leaning sources, center, right, and then you can actually get a comparison to see exactly what the media bias is and what each side is actually focusing on. With this one, we can see that 40% of the sources reporting on this are left-leaning, and you can actually get a lot more information on the ownership of each source that's reporting a certain news story. Ground News aggregates all of the sources in one place right here so I can quickly find the original source and read more efficiently. I still think everyone should be using the blind spot feature to steelman your arguments and see what stories are being reported on disproportionately by either side. And you can use Ground News on the web or on their mobile app. They also have a browser extension as well to keep you informed anywhere on the web. I really believe this is a mission worth supporting, especially in this day and age, and if you agree, you can go to ground.news/electrified and subscribe through my link for as little as $1 a month, or you can get 30% off unlimited access for just $5. And thank you to Ground News for creating this service. The world really needs this tool to cut through the nonsense. Today we got a Subaru press release that they have finally got on board and they're adopting the NACS. This agreement will be for charge ports of its BEVs in North America starting in 2025. This should come as no surprise given that so far Subaru really only has the Solterra EV, which in all actuality is just a Toyota BZ4X rebranded as a Solterra, and we just recently got the announcement Toyota has adopted the NACS. They did say, however, that this will be for certain Subaru BEVs, implying not all of them. They'll provide access to an adapter enabling NACS charging from 2025, whereas some other companies were offering an adapter as soon as 2024. Subaru also mentioned access to 15,000 Tesla superchargers, while many others listed 12,000. Now that we have Subaru on board, the remaining major player holdouts, VW, Stellantis, Lucid, and Mazda. The Verge put out a pretty long article of an all-hands meeting, but it was really focused on Elon and X. However, in that we did learn that Tesla's latest V12 FSD is actually called Rodeo, made up entirely of neural nets. So this is just a fun fact for now, but Dr. Know-It-All John recently did a video about a potential limitation of an entirely neural net version of FSD, and his point was solving for edge cases with an entirely neural net based approach may be more difficult. With C++ or the human code, you just take that weird event and then write specifically what you want the car to do in that event. Whereas with a neural net based approach, you actually have to find real world examples where that one thing happened. So pulling that very specific data may actually be more challenging than it would have been using C++ code. And as much as we all want to know how much the Cybertruck will cost and how many Tesla thinks they're going to make, these are the type of questions I would love to see on the Say questions for Tesla quarterly calls, because Cybertruck questions we'll get answers to in time, but questions like John brought up, we may not get unless someone specifically asks Elon. Energy Storage News shared this chart from Wood & Mackenzie showing us 2022 global battery energy storage system deployments. The number one company globally in terms of market share at 16% was Sungrow. Tied for 2022 global best market share, we have Fluence and Tesla, both at 14%. So as I said earlier on X, to all of the Tesla critics that like to argue Tesla's battery energy storage division is a minor player in the global market, the data says otherwise. The top 5 for 2022 is then rounded out by Huawei and BYD, each with a 9% global share. This is a great data point to have if you ever see somebody make that argument that Tesla's battery storage market just isn't that big in terms of global players, when in reality last year it was actually tied for the second biggest market share. Pair that with the fact Tesla only has one Megapack factory that's not even at full capacity, with margins for the Megapack likely already over 25%, and we should be getting Tesla's second Megapack factory in Shanghai coming online with production sometime in Q2 2024. At the same time, we also have Clean Energy Associates saying that US-made battery storage systems will become cost competitive with those from China in 2025, thanks to the IRA. This article is just going on general industry averages by country. However, when it comes to the investment tax credits and the production tax credits, this narrative that China is way more cost competitive in the battery storage market than the US may not stay that way for too much longer. And drilling further down for more nuance when it comes to Tesla specific costs as they continue to scale their production and drive more manufacturing efficiencies, they'll also drive their costs down even further. And they'll be making them in China as soon as next year, reportedly for export to the European market. A quick note on that, back from Wednesday last week, I did an earnings per share calculation of Tesla's deferred revenue for their energy storage, but I accidentally left off the last step of converting that 55 cents in earnings per share down to actual profitability, which would be in the neighborhood of about 25%. I was under the impression that Tesla was recognizing the cost for the Megapack at time of production, meaning a lot of that deferred revenue would actually flow to the bottom line as true earnings. But I did go ahead and check with Tony the accountant, and there really isn't enough clarity or transparency in the documents to figure out Tesla's timing for production costs of Megapack. So to be conservative, like I always try to be, the best thing to do would be to take that 55 cents in earnings per share and then multiply that by about 0.25 to get Tesla's potential earnings per share boost when they actually recognize that Megapack deferred revenue. Rob did mention this one the other day. Tesla won that trial for a crash that involved a fatality, and the claim was that autopilot caused it. I just want to drive this point home how big of a deal this really is going forward. Had this trial gone the other way, this would have opened up a major can of worms for all future accidents for people to then claim that, hey, it was actually Tesla's fault. So for the future and establishing precedents, this is a major, major victory. Now you're also going to have some people say, well, the driver was drinking, so that's kind of a smoking gun for Tesla, making this a much easier case. And sure, I would agree with that, but I would add that Tesla has always maintained that no matter what's going on with autopilot and FSD, the driver is still responsible. So if there's an accident right now with Tesla at level 2, the driver is still ultimately responsible. Regarding that case, Elon replied to Sawyer saying, the irony is that if autopilot had been turned on here, it would almost certainly have saved the driver. So Tesla got a major win in the US market, and at the same time, Tesla gets a major win in the Chinese market. A social media influencer had claimed that a malfunctioning Model Y caused an accident that led to 2 fatalities and 3 other injuries. But forensics investigations ruled out the possibility that the accident was caused by defects in the steering or braking system. So the social media influencer was forced to issue a public apology and pay Tesla $4,100. Obviously, this is not a big deal for financial damages, but again, for precedents going forward in terms of Tesla accidents, the more cases like this that Tesla wins, the lower the chances become that Tesla actually sees more cases like this. And further, when Tesla does unfortunately inevitably see more cases like this, they actually have precedents on their side. Just a quick public service announcement: if you're in Illinois today, the new EV rebate program is going live. This program does, however, have a cap that may be met fairly quickly, so if this applies to you, you may want to apply as soon as possible. I'll have this article linked below where you can get up to a $4,000 rebate, which would be in addition to the $7,500 tax credit. I'm sure many of you already saw Elon on the Joe Rogan podcast and the Cybertruck taking a shot from Joe Rogan's arrow. And now if we look at the Cybertruck search volume for the past 7 days, you'll see that this may not have been technically advertising, but Tesla is spreading the word in ways other than just traditional ads. This is a microcosm of that halo effect that Gary Black keeps talking about when it comes to the Cybertruck. So even if they don't sell 500,000 a year in the first few years, the few that are on the road are going to cause people to say, what is that? Oh, it's from Tesla. What else is Tesla doing? And that right there is something you cannot quantify. You can't put it into a spreadsheet, and thus Wall Street cannot model for it.
We continue to work on our research in this company all the time. Virtually every week, we're talking to someone there. I was out in Palo Alto a week ago, and I was there for an afternoon, and I met with 2 executives who were the people who were in charge of autonomous driving and also in charge of compute, of what NVIDIA does, the chips. So what we're always doing, we're trying to understand how a business operates and what's special about it and why other people can't do the same thing. And in the case of Tesla, we are convinced that people cannot do what they're doing and that ultimately it's not just going to be a car company, it's not just going to be a battery company, but ultimately all the other car companies, which 50 years ago elected to become much more profitable and outsource supplies and compute to other people, we're going to be like Intel was inside of computers. This is going to be Tesla inside of cars. All the cars are going to be using Tesla autonomous driving. No one else can possibly compete.
Today, the Treasury has confirmed that the IRS has opened registration for car dealers to receive their direct tax credit payments. Effectively, it's this portal that's going to allow the point of sale tax credits in 2024 so consumers can actually transfer them to the dealers, and then the dealers can give them that $7,500 discount at the point of sale. The biggest hesitation of this entire program for the dealers has been how long it'll take the IRS to actually reimburse the dealers for them giving the customers these upfront payment discounts. The good news, the IRS is saying it expects to issue advance payments within 72 hours. A quick fun fact from the Department of Energy, manufacturers have announced over $500 million in more than 40 American-made EV charger plants. Looking at the map, here's where those manufacturing facilities are set to be. This does include fast charging and level 2 as well. And yes, 2 of these will be for wireless charging. With this one, I think it's going to serve as a good reminder if you're somebody that's rooting for the demise of ICE makers, it may be a few more years before that demise actually comes. It's now as clear as ever that many legacy OEMs are giving up their striving for becoming an EV leader, and they're really just going to focus on making as much money as possible from their profitable ICE vehicles. Today, Toyota raised its forecast for net profit for the current fiscal year to an all-time high. $26.1 billion is the expectation, which would be up 61% over last year. They also raised expectations for operating profit of 1.5 trillion yen. However, 1.18 trillion yen of that figure will actually come from the impact of foreign currency rates. The easiest way to think about this, with the yen weakening for Toyota, all of its overseas earnings, when they actually take that currency and convert it back to the yen, they're going to end up with more yen. And if the yen starts strengthening, which it actually might in case the Bank of Japan steps in, that adds more uncertainty. Their CFO did add there are still lots of concerns, and in China, the market behavior is changing. In China, in the first half of its fiscal year, so far, Toyota has sold the same number of vehicles compared to last year. Flat sales in China, and Toyota has lowered its projection for annual global EV sales to 123,000, down 39% from its previous forecast of 202,000. So look, I know many people out there are pretty excited to see legacy OEM profits decline, sales decline, because that'll really be the nail in the coffin of ICE vehicles and the true takeover of electric. With everything we've seen over the past month, it definitely feels like that time is going to be delayed. It could be another 1 year, it could be another 3 to 5 years. Either way though, during that time, with other automakers focusing more on their ICE vehicles, focusing more on hybrids where you don't have all of this cost competition, it's literally just going to open up the door even wider for Tesla to continually gain more EV market share. The truth is, none of these legacy CEOs want to be at the helm when their company is the one hemorrhaging billions of dollars trying to transition to EVs. And now they're all saying, well, the customer is not showing demand for electric vehicles. The problem with that, they're not showing demand for the EVs that they're making. The demand for compelling EVs is there. Just look at what Tesla is doing. The reality is these companies could not compete with Tesla if they were just focusing on EVs, but now that they're shifting their focus back to ICE vehicles, things are somehow only going to become easier for Tesla. Just a data point where the yen has been trading as of late, it's just shy of a 33-year low. Toyota has also raised the hourly wages for US manufacturing, distribution center, and logistics employees for the third time this year. Historically, it's usually only twice per year. The top hourly wage will go up to $34.80, and they cut the number of years to reach that wage from 8 down to 4. This latest increase will go into effect January 1st, and it's actually a $2.94 raise or a 9.2% increase for top tier hourly employees. For skilled trades employees, they got a raise of $3.70 up to $43.20 per hour. As if we needed another anecdote to drive home the point, VW putting off a Gigafactory due to sluggish EV demand. Oliver Bloom said based on market conditions, including the sluggish ramp up of BEV market in Europe, there is for the time being no business rationale for deciding on further sites. In fairness, they do have 3 other sites in the works that combined should make 200 gigawatt hours of batteries per year, but as we've seen, all of these promises from legacy OEMs should be taken with a grain of salt. The wait time for the Model X all-wheel drive that does now qualify for the tax credits has now been pushed back 1 month, now sits at January to February of next year. Before, it was December to January. This article was making its rounds. If you scroll down, you see the headline, "We send out broken cars," according to a Tesla employee. This has to do with the strike that is seemingly taking place over in Sweden when it comes to certain mechanic shops. They're saying Tesla mechanics don't have enough time to complete certain tasks, and that the system rewards those who do a bad job because then you get better productivity on paper. With one employee saying, "We have received a direct order from the manager to send cars out before they are ready, otherwise we can't reach the productivity goals." However, if you do a little digging, we find something pretty interesting about this Dagens Arbete. I know that's probably not how it's pronounced, but either way, Dagens Arbete is one of the biggest Swedish trade union magazines, aka the company organizing this strike in Sweden, which we're getting mixed reporting on, some saying workers are striking, others saying no workers are striking. As with everything, context is king, so if you saw this, personally, I would not be putting too much stock into this. A quick nod to my Canadians, the Quebec government just approved a 7 gigawatt hour energy storage manufacturing plant. This for a tech company, RAQ. The first phase will be 7 gigawatt hours, and eventually that'll rise to 20 gigawatt hours, about half of Tesla's Megapack factory. Martin Vieca said the Cybertruck Lottery has the highest attendee sign-up rate ever. Not really a big surprise. Ford is buying Automotive Power, or AMP, a smaller energy-based company, for their tech and talent. Ford declined to say how much it spent. All we really learn is that they have around 149 employees, of which Ford will bring on the majority of. The founder of AMP actually previously worked on Tesla's engineering team. All we really learn is that Ford is focused on accelerating EV adoption and improving charging experiences. Don't forget, check out Ground News linked below. Take advantage of those discounts with my code if you're interested. Thank you in advance if you do. Hope you guys have a wonderful day. You can find me on X linked below. Please like the video if you did, and a huge thank you to all of my Patreon supporters.